right, guys. Let's do it today. I slept great. Got a little coffee in my system. You guys are in trouble. Eight ticks. Good to see you back in the room. Oh man. All right, guys. One thing I did and this isn't. You don't even have to click on these pictures, but I wanted to show you. This is how I document a trade. 1, 2, 3, 4, 5, 6, 7 pictures in one trade. And the reason that I share that with you is because I'm constantly working on management. I'm constantly working on entries. I'm constantly working on being present in the trade and looking at what my indicators are telling me rather than just hoping I make money. So if you wanted a little insight into a pretty pragmatic approach to management, those 7 pictures are a good one. Today is the 24th day of September, guys. There's a chill in the air. Life is good. Birds are singing. And we're checking news. And at 10 a.m., thanks, Jen. I think about you guys even when I'm not talking to you, I promise. 10 a.m., guys, we have medium impact new home sales. When I see medium impact, one thing I think is, hey, somebody might take a lot of profit. Somebody might enter a position. It's not high impact. I don't necessarily sit on my hands. I won't trade directly into it personally, but what I will do is I'll make sure I protect my position if I am in one in medium impact. And then if you're a crude oil trader, guys, at 10:30 a.m. it's inventories, and that could affect the market. So you got to watch out for those crude oil inventories, and a lot of times they'll jockey for position a little bit too. It's 49 here, Ron. Whew. It is 49 here. Who lives like that? So guys, we're going to have some fun today. We're going to do what we do. And what we do every day is we talk about patterns, guys. We work on teaching you to read your indicators so that you can make good decisions. That's all it is. I'm looking for my new people. I guess I scared them all off yesterday. Guys, we're going to talk about advantages. Good morning, Alan. It's good to see you. We're going to talk about 2 different platforms. Boop, there it is. We're going to talk about NinjaTrader. And I always do NinjaTrader first, guys. We've been teaching NinjaTrader for 20 years. It uses dynamic Renko bars, Nexgen dynamic Renko bars. They smooth out everything. They move a lot faster than what you're going to see on TradingView. So as you come into this day, know which platform you're on, guys, and focus on the rules that go with your platform. One of the biggest things I see from people who make the transition from dynamic Renko to minute bars, from NinjaTrader to TradingView, is they try to apply NinjaTrader rules to TradingView charts or vice versa. So know where you're at, and it'll make life a little bit easier. We're going to go through today, and we're going to do the same stuff we do every day, guys. We're going to talk about the best of the best. We're going to talk about the highest probability. We're going to talk about the trade, and regardless of which platform we're on, we're going to talk about the trades that are created by design to give you the highest chance of success as you learn to read your indicators, guys. So this morning I'm going to give you rules and plans to learn the rules for 2 different platforms. I'm going to give you one plan that is the NinjaTrader, and it is labeled the KISS plan, guys, the Keep It Simple Sunshine plan. And it's a very basic plan. It's designed to optimize your chances of success. And most importantly, it's designed to teach you to read your indicators, guys. And this plan is your launching point. This plan is not your get-rich plan. Well, for some of you it might be. This is the plan that teaches you to recognize advantages. This is a plan that teaches you to look at your charts and know what's working for you and know what's working against you so that you can make good decisions. The second plan that I'm going to give you in the room is for TradingView. And once again, it's a stepping stone in your learning journey, guys. And for everybody in this room, good morning, Chariot. Study, simulation, class feedback, and practice. You're going to write your own plan. You're going to see more than you see in this very basic plan. You're going to find ways to make money outside of the way that you're taught to read the indicators. And I want you to embrace that. You're not necessarily cemented in place. So when we talk about these plans, I'll go ahead and drop these in the room for you. And I'm going to drop the spreadsheets in the room too. Both plans revolve around patterns, guys. And that's all trading is. It's patterns. It is the same thing every day. It's the same look every day. It's the same advantages every day. And with those advantages, with your ability to read your charts, you'll choose to enter or choose not to enter. So we're going to learn the rules for both platforms. Everybody in the room has the ability to simulate, to practice, to have zero risk on a trade. The only thing that you're doing is getting reps to build experience so that reading your indicators becomes easier. You also have the ability to post in the room, just like Paul did. And every time you post in the room, guys, we're going to go back in the second half and we're going to click on your charts and we're going to look at your entries and we're going to talk about your exits and we're going to look at everything and see if there was anything that you could do better, see if there's anything that maybe was a misread. And sometimes we're just going to virtually high five. And I'm going to say to you, wow, what a great trade. That's awesome, amazing. Or, wow, you followed every rule. You had every advantage, and those dag-nabbit sons of guns took your money anyway. And guys, that's a part of trading too. Wins are every bit a part of trading. Losses are every bit a part of trading. If you go through learning how to read your indicators and recognizing advantages, you can sidestep avoidable losses. And that's kind of my goal. So we're going to learn rules. I want you guys to simulate. If you are on NinjaTrader, every chart you post in this room, I want you to tell me the momentum, the terminations, and the entry that you saw. We're going to cover all three of these things this morning the way we do every morning. If you are on TradingView, guys, I want to see your large chart read and I want to see your entries on both. And guys, if you do that, you will get the best feedback out of me. If you present a chart that says entered here, I'm going to say, hell yeah, you did. Way to enter there. Tell me why, guys, because when you annotate charts, when you take the time to write on a chart, to talk about what you did, and man, I wasn't going to do this, but I'm going to because I think this is important. I know exactly why I entered on this trade. I know exactly why I moved my stop. I know exactly when my target got hit. I knew when my second stop movement was and why, and why, and why, and out. And guys, through annotation, you are literally writing a recipe for success. You are literally describing the pattern that you're going to trade. So do not hold off on the annotations, guys. The people that take the most pictures typically do the best. And then simplify. Keep it easy. Keep it easy. So Paul just wrote, after seeing these awesome trades above, I feel like a fool turning these feeble attempts at trading in, but the show must continue. And Paul, it's a big learning experience. I don't know about you guys. I've got a giant chip on my shoulder. I'm an egomaniac. I believe that if I walk into your room, you are fortunate to have me in your room. And most traders are that way. And because of that, we hate plans because they're not ours. We hate following someone else's rules, guys. I hate trying to stick to something that someone else wrote. I'm going to do it better. And guys, that's my personality. Fortunately, I helped write these plans, so I am doing it better. But simplicity pays dividends, guys. And one of the things about day trading is we're here to get paid. We're here to make more than we lose. We're here to walk away early in the morning, go to the beach, go to the mountains, go to wherever makes you happy, the golf course, because you made your money following a pattern in the morning. So if you keep it simple as a brand new user, if you stop trying to find all the money, but you try to find the easiest money, the highest probability money, you will actually be floored at how much money you are able to make. And that's where the simplicity comes in, guys. Those plans only have 2 trades each. And those plans, um, the checklists are only 3 deep, and they revolve around momentum and path, and you'll see 2 different types of entry. And we're going to start with NinjaTrader right now, guys, and I'm not using my PowerPoint because I'm feeling all over the place, and we're going to have a good time with it. But let's start with NinjaTrader, guys, and we're going to talk about what's called a high probability trend trade. And a high probability trend trade is a trade that, when you follow the rules, gives you the potential to win up to 70 to 80% of the time. This is a pattern. It looks the same every time you take it, guys. And this pattern can be tested, it can be repeated, it can be proven. And guys, that confidence really helps the new user. Being able to win more than you lose is amazing, because losses are frustrating, guys, but losses for the new user are just learning experiences. So these 3 rules: strong triggers, no terminations, and then defining an entry. These 3 rules happen on only 2 charts. NinjaTrader uses a large chart and a small chart. If you have to know the numbers, it's a 13-2 and a 5-1. But the large chart defines direction and lets you know which way you should be looking for rules to be met, guys. And the large chart will give you that advantage of momentum, and it'll make sure that there's nothing in the way. And rules 1 and 2, giving you those first 2 advantages, momentum and clear path, the core advantages, the ones that you're going to use to build a bigger, better mousetrap, they all come to be on 1 bar. It takes the most current bar to define direction, momentum, and areas, guys. Don't overthink it. Don't worry about what happened over here. Be in the moment. What are your indicators telling you right now? Because you're trading right now. When you have momentum and path, we go to a small chart. It's a fast chart. It's a oh my gosh, there's so much fluctuations, but these core advantages don't go away during those fluctuations. This is your entry chart, guys. This is your refinement chart. Taking that 1 bar, breaking it down into 20 or 30 bars, and allowing you to reduce risk, allowing you to maximize profit potential. And rule number 3, entries come from the small chart. We use these 2 charts because they're just a metaphor, if you will, like Taserface. Who are you trading with? Who are you trading against, guys? The large crowd, the institutional traders, the big money, whatever you want to call them, the man. They create trends. They establish momentum. They react at areas. And if you go with the large crowd typically wins, guys. It's very much just going with the flow. It's the world's greatest lazy river. This is Norbert. Norbert's a representation of the people in charge, the apex predator, the one that you don't want to fight. Day traders, successful day traders, are remoras. We wait for the people in charge to give us the advantages we need, and then when they do it, we find ours. We find a way to get paid. We find a way to get fed. So large chart leads the way. Small chart is the small crowd, guys. These are the men and women that still have way more money and influence than you, and they create retracements and they create little pullbacks, but they typically fail 70 to 80% of the time when the large chart is giving us the advantages that we need. So your entry is designed to pinpoint their failure, to pinpoint where the market is most likely to bounce and continue with everything that the large crowd wants. And again, this is just a stepping stone, guys, because this trade, this methodology is designed to teach you to read your indicators, and reading your indicators is about 90% of your day. Reading your indicators, looking for advantages, is about 90% of your day. 10% of your day will be actively trading. Man, I took a picture yesterday because people don't believe me. They're like, there's no way, I've got to be active or I'm not getting paid. I took a picture, I think it was of my day yesterday. I take a lot of pictures. Let me see if I can find it. But it was the time in the market. That's what I found interesting, and I have absolutely no idea where it went. Did I mention taking pictures is good? The more pictures you take, guys, the faster you get to where you want to be. Well, heck fire. There it is, right there. 120 minutes of seat time, 7 minutes of actual trading. Guys, my average time in the market was 53 seconds. Good morning, Miss Trina. I saw your smiling face in there. It's nice to have you back. Guys, 53 seconds is my average trade time. 1 minute and 43 seconds was the longest trade that I took. It's not about doing the most, guys. It's about doing the best. So we're going to break down these 3 rules for you. We're going to talk about these advantages, how to recognize them, and my hope is that you start speaking out loud when you look at your charts. I have momentum. My path is clear. Nobody's going to keep me from finding an entry area. So we're going to start with what the indicators are, and then we're going to talk about how to use them. So both charts will have trigger lines, guys. These are just moving averages. That's all they are. There are small triggers and large triggers, fast triggers and slow triggers. You don't have to know what creates them. You don't have to know the magic that makes them pretty and green. All you have to know is that these are small and these are large, and when everything is green and they're going up. And these are small and these are large, and when everything is red, they're going down. And you're going to use trigger lines in everything that you do with the software. You're going to use trigger lines to define momentum, making sure that advantage is in place. You're going to use trigger lines to define termination conditions, making sure that you have room to targets. You're going to use large trigger lines to define the most amazing entries you've ever seen. Trigger lines do like 90% of the heavy lifting. You're also going to have areas. These are your brick walls. You're going to have them on the large chart and the small chart. They all have names. There's Fibonacci resistance. There's Fibonacci support. There's divergence, which is a magenta line from a pivot or a cyan line that comes off of a pivot. Divergence means loss of momentum in this software. That's all you need to know. You don't need to know the calculations. But every time you see a magenta line, there's a loss of momentum. Every time you see a cyan line, there was a loss of momentum right at that exact price. Resistance can stop the market in an uptrend. Support can stop it in a downtrend. And these yellow one-to-ones are fibs that print in the moment. They can be support or resistance depending on which direction the market is going. You're going to use areas differently on the different charts. On the large chart, these are where these folks are making decisions. These are where buyers are buying and sellers are selling. And on the small chart, that's where the small crowd's most likely to fail. You don't have to know the whys, just know the names. And then let's break it down, guys. Everything starts with strong triggers. Everything starts with a big chart, strong triggers, giving us the advantage of momentum. And this is one of the easiest lessons that you guys get today. When the background is green on your large chart, you're in an uptrend. Look for rules to be met for high probability trend trades long. If it's red, you're in a downtrend. Look for rules to be met for high probability trend trade short. Trading with the trend, guys, that's kicking off the advantages instantly. In order to have strong triggers in an uptrend, both small and large triggers must also be green. In order to have strong triggers in a downtrend, both small and large triggers must also be red. If your colors don't match, you don't have the advantage of momentum. You're in a little transition. Maybe you're going from strong to weak, up to down. But guys, if they don't match, rule number 1 is not met. And guys, if rule number 1 is not met, it's okay to not even look for rule number 2. Use this as a flow chart. But what strong triggers is, in an uptrend, it's separation. It is smalls above the large. And as long as there is a gap, big or little, doesn't matter. As long as there is space between the two, the odds are favorable for the market to continue up. And as long as there is space between the small and large, the odds are favorable for the market to continue down. We call this odds favorable momentum. You'll see it on charts all day long. OFM, people annotating, OFM had the best momentum ever. Momentum is hard to stop, guys. It has nothing to do with price bars. It has nothing to do with areas. It is simply separation in the triggers. And when momentum goes away, when the gap closes, when the smalls return inside of the large, that's weakness, which happens to be the opposite of strength. Here I have strength, the odds are favorable. Here I have weakness, anything can happen up or down. Now, I don't know about you guys, anything can happen doesn't sit well with me if I'm going to risk my money. Strength inspires me to look for the next rule. Guys, when you have strength, this is when key areas are most likely to break. This is when the market is hard to stop. This is when we're buying or selling Fibonacci support and resistance on that smaller chart. When I have weakness and anything can happen, that's where the market turns from the middle of nowhere. That's when key Fibonacci areas are more likely to hold. So pretty simple lesson, guys. Is everybody good with that? Strength, weakness, only one of them has your rules met. But if you have strength, we're going to make sure that there are no termination conditions. We're going to make sure that there's no areas that could stop a market, guys. And all it is are these horizontal lines on a large chart. This is where the large crowd is making decisions. This is where, excuse me, where the buyers may enter, where profits may be taken, where the buyers and sellers may fight one another. You're going to see them before you ever get to them. And you're going to be able to use a simple recipe, guys, to determine whether or not they're termination conditions. And it starts with price reaching the area, allowing your dynamic Renko bars to reach resistance, yellow 1-to-1s, divergence highs and lows, support, yellow 1-to-1s, divergence highs and lows. And guys, when price reaches the area, we're done with price. The decision making is set off. You just pulled up to the speaker at McDonald's, now it's time to order. You're going to count your trigger lines. That's all it is. If price reaches resistance, how many triggers have made it through? 0, it's a termination, guys. If both small and both large are below the area, that area is a termination condition. And that termination condition could stop the market, could create an untradeable bounce, could create a reversal. And guys, it happens over and over and over. So it's not the one time that it stops the market that we're looking at, guys. It is the myriad, the multitude of times that when price reaches an area and none of the triggers break, your advantage is gone. So as a brand new user or as an experienced user who likes to trade into areas as much as I do, just assume that it's going to hold. Assume that it's going to bounce. Assume that it's going to take your money. If 2 of your trigger lines get through, both small, get above that area of resistance, this area does have the potential to break. And as you grow with the software, you might take shots at this one. If you're a brand new user, this is not your best look. This is not your highest probability look. This is not the look that instills confidence. It takes 3 trigger lines, both small and 1 large, breaking through the area. Now that Fibonacci breakout is more likely. Now that Fibonacci breakout it looks good. And this is the second trade in your plan. Trading a trend trade with the potential to break areas. But it's still not a clear path. It's still not high probability. And it won't be until 4 trigger lines get through the area. And when 4 trigger lines get above resistance, resistance behaves as support. And when 4 trigger lines get below support, support behaves as resistance, guys. And a clear path coupled with momentum, is the easiest trend trade you will ever take. When all of your triggers are above resistance and it's behaving as support, when you have separation between the small and large, when you have room to targets, that tail on a large chart is a pullback to an area inside of triggers on a small chart. You will be able to pinpoint where that tail is most likely to form. You will be able to ride that momentum up to the next area if that's where it decides to go. We also get them from reversals, guys. If everything is up and it reaches resistance and it reverses the market and it gives you momentum and the path is still clear, you're going to be able to pinpoint that tail. That tail is the best of the best entry you could ever take with all that room to targets with momentum. And if your termination condition, guys, if that that termination with no triggers through does reverse the market, make the large triggers go from green to red or from red to green. We call that a strong top or a strong bottom. And a strong top or bottom is the precursor to the highest probability trend trade you could ever take. And a strong top or bottom is mandatory in the plan that I gave you if you're going to try to trade the potential of an area to break. So let's look at, I think it's crude oil. Yeah, so let's go through and just take a look. Weakness, big untradeable pullback, right? It's still going up. It looks like it wants to go up, but without strength, they got a pretty good retracement. 4 triggers through resistance. You can see that they stabbed back, tried to treat it as support. Only 2 triggers through and support didn't break. No triggers through a divergence high. It didn't break. 3 triggers through, and you know what? It didn't break. They still pulled lower. No triggers through. But guys, this is what we're going to do right now. We're going to circle that tail. And I'm going to ask you in the room, if you're brand new, do you see momentum, smalls below the large? On this one bar, do you see how it didn't hit Fibonacci? How it cleared the previous areas? That is the best of the best look, guys. That's the one. And we're going to go and talk about entries. And we're going to open up a smaller, faster chart. And we're going to look for one specific phrase on entries, guys. We're going to ask ourselves, did the market pull back to an area inside of triggers? And I'll be damned, it most certainly did. And the market continued down. And that's rule number 3, guys. But I want to ask first, is everybody good with the idea that strong triggers leads the way, that momentum is going to be hard to stop, that that's what we look for to break areas? Rule number 1 will even cover some of the mistakes that you make as a new user. Rule number 2, making sure that you have room to targets, making sure that there's room to make money, having that clear path, guys. When those are met, when the large chart says up, when the large chart has nothing in the way, when the momentum is strong, your entry is very specific. Your entry is very precise. Your entry is so precise that you're going to use a limit order and you are going to buy or sell a pullback, that little shove by the small crowd, and you're going to do it in an area, at a fib, at a mid-band, at a yellow 1-to-1. And the key is those areas need to be inside of triggers. Areas and triggers need to work together, because these moving averages, these large triggers, price tends to return to them. It's a phenomenon. It's scientists are baffled by it. Not really. It's regression of the mean, guys. When the moving average price breaks away, it returns. Large triggers on both charts define where the market is most likely to retrace. So we put both chart large triggers on your small chart. The smooth ones are native. These are your 5-1. You can use these with the small triggers to define momentum. The ones that look stepped, have those little edges on them, those are nothing more than the large triggers from your large chart. We call them synthetic because they're from a different time frame. Your trigger lines, large and synthetic, define where the retracement is most likely to return. The areas inside define where the market is most likely to bounce and continue with all of the large chart advantages. So when looking for an entry, it's nothing more than a pattern, and I can't stress that enough. It's the same look every time. When the market is going up, when the momentum is strong, when the path is clear, and I can't stress following rules on the large chart, your reversal bar on a small chart begins a pullback, which means that everything is going to be going up, and you're going to wait for the small chart to go down. And guys, it's counterintuitive, but remember, inside of this one bar on a large chart, you're going to see a retracement, a bounce, and continuation in a successful trend trade. So the reversal bar starts the retracement. You'll know precisely where that retracement is most likely to go using large and synthetic triggers. So somewhere in this red box, from the high line to the low line, this is where the market is most likely to retrace. Not absolutely going to retrace, not bound by contract to go to this area, but this is where it's most likely to retrace using that regression of the mean. Areas inside of triggers. I encourage you to learn that phrase. Pull back to an area inside of triggers, to a fib, to a midband, to a yellow 1-to-1. Because areas in the retracement zone give the market something solid to bounce from. And sometimes you'll create a window because of multiple areas from the highest point to the lowest point. I call it the window of opportunity. A lot of Ric Flair fans call it the woo, but from the highest point to the lowest point, this is where the small crowd is most likely to fail. This is where the small crowd is likely to give up their fight and let the large crowd take back over. Because of the large chart advantages, your job is to activate a limit order. Tick or two above that highest point of support and hope the small crowd gets there. And I understand fully it's counterintuitive to buy a market when it appears to be going down, but that retracement is going down when everything is screaming up. That retracement is coming down and your large chart momentum doesn't blink and your large chart clear path doesn't change. And it's just a tiny little fluctuation inside the bigger move. So reversal bar, define the retracement zone, find the areas inside, activate your limit order, and anything below the triggers for a long trade is where the market shouldn't go, guys. This is where I will willingly lose a trade. This is where the advantage of rule number 3 is no longer in play. And about 4 to 5 ticks below those triggers is where initial stops will be placed. Because if they can push through the retracement zone and through the areas inside of that retracement zone, guys, I don't want to be in that trade anymore. Entries do not come from the wrong side of the triggers, from beyond the triggers, because you don't know if, when, or where that market is going to continue up. In a downtrend, reversal bar begins, the pullback is not the entry. You can define the retracement zone using large and synthetic. You can define the bounce point using the area inside. Write down the phrase, pull back to an area inside of triggers. You will never miss your entry. Anything beyond the triggers is not where the market should be if this is going to be successful. This is where I will happily, willingly take a loss. Because this is a pattern that typically wins 70 to 80% of the time, guys. I am more than happy to get stopped out on the perfect trade because I can prove that the perfect trade typically wins 70 to 80% of the time, which means I'm obligated through math to lose 20 to 30% of the time. I can minimize my losses by putting my stop where the market shouldn't go. And guys, that's it. That's your high probability trend trade. Let's go back and watch this. I'll show you how you can call your shots. Dun, dun, dun. Let's do an entry together. What do you say? Do I have any new users, any demos in here? Guys, you can go back and do this historically. This is how you're going to study. See that tail? We're going to hide it. Does everybody see momentum? Strong triggers, smalls below the large, space between. Everything says this market is likely to continue down. We comfortable with that? Thank you, Andy V. Price has not reached Fibonacci support. I've got a little room to make money, right? Now let me cover a pretty common concept. How many of you right now are saying, Mark, there's no room to make money? You don't have any space to get to that fib. Why are you looking for a trade? I did it all the time. Remember, guys, the methodology, this is where we know it's time for a trade. That's not where we're going to enter. We're going to enter on a pullback at an area inside of triggers. But what I need first, I need that reversal bar. Because without the reversal bar, the pullback hasn't begun. But let me show you something pretty cool. I don't need a reversal bar to know that price typically returns to the triggers. So I know where my retracement zone is most likely to be before I ever get the reversal bar. And I know that I'm looking for areas inside of triggers. So I know exactly where the bounce is most likely to happen before I ever get the reversal bar. If you just learn the language, you will have 3-4 minutes head start waiting for your trade sometimes. So the small chart continues down, and I'm just waiting for a reversal bar. And you'll notice as it moves down, my mid band moves down too. So my zone gets just a little bit bigger. And as it moves down, my mid band moves down too. So I'm watching it, but I still know where my trade's coming from. And now that top fib is out of the equation. My box keeps getting smaller. And it goes down, and there's my reversal bar. And I had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars over the course of 20 minutes as I waited for this entry. Are you guys with me so far? Price is most likely to retrace from the top of the triggers to the bottom of the triggers. Price is most likely to bounce from an area inside of those triggers. With a little bit of study, well, it's not going to let me because the market's in the wrong spot. With a little bit of study, you'll activate a limit order. That's what this represents. This white line is where you're going to put your limit order and hope the small crowd comes and gets you. Does that make sense, everybody? We know where it's at before it ever happens. And here's the other thing. I know exactly where my stop goes. There it is. I know exactly where my stop goes before I ever enter the market. We'll just make it chocolate because chocolate's delicious. So not only do I know where I'm going to enter, why I'm going to enter, I know where I'm going to get stopped out if things go south. So the market comes up. Congratulations, you're in a short trade. You're in a short trade with the advantage of momentum. You're in a short trade with the advantage of a clear path. You're in a short trade from the area where the market is most likely to bounce and continue with large chart advantages. And there it is. And the plan I give you, your initial stop, which was pretty big on this one, goes 2 ticks above that bar once it goes in the direction of your trade. In the plan I give you, you're already $100 in the bank. And in the plan I give you, where were we in? 49, 39? If we get to 29, ta-da! That's your $300 trade. That's $300 over the course of, well, that was really slow because it was in the afternoon. But guys, that is the methodology. That is the plan. And if you go historically and circle tails on a large chart with the rules met, it shows up right at the top of the pullback. And guys, that is the high probability trend trade. Sometimes with momentum and path, they won't give you an entry. Sometimes with momentum and path, let's see if we can find one. That was a super strong trending market yesterday. I think that's the one that we just did. So let's scroll back. Sometimes you have to wait a while. There's one. That was in the middle of the night. Right to the area, right inside of triggers. So guys, is everybody good with that? Your KISS plan is designed to teach you which charts you're using, what each chart does, what the best of the best is, and gives you a way to manage it. And if you take the time to learn that trade, if you take the time to learn this pattern, guys, you are going to be set. It's keys to the kingdom. It's everything you could ever hope for, guys. It's the perfect trade. And that trade teaches you to read your indicators. And once you can read your indicators, once you know what's working for you, once you know what's working against you, guys, you'll start making different decisions. You'll start finding more opportunities. So learn the foundation and move forward. Are there any questions about the orange that is NinjaTrader? Any questions about the high probability trend trade? Good to go, feeling good. Quiet class today. That's all right, guys. That's your right. We're going to go to TradingView now, guys. And we're going to go straight off of the plan. And John Novak just updated all of the workspaces so you guys could get these very basic no color workspaces. Your trading view plan is designed to optimize your chances of success. Your trading view plan is set up to teach you to read those indicators, to make good decisions. And your trading view plan is the stepping stone, guys. It's the beginning. It's the first, not the end. Whoops. I was going to bring up my slideshow here. Because there's one picture that I want you guys to see. And I'll do this. Give me 1 second. Sorry, I'm ill prepared. There we go. There are two charts on TradingView. The same way, there are two charts. I hope so. I hope it gets rowdy, Ron. I had someone disappear on me yesterday because I asked them to post in the room and get where they wanted to be, and they just refused. So, guys, I want you talking. I want you interrupting. I want you asking a million questions. I'll give you every answer you could ever hope for. The 15-minute chart, guys, your large chart on TradingView is minute, not Rinko. And it takes a long time for 15-minute bars to produce. Actually, it takes 15 minutes. A lot can happen in 15 minutes. So we're using the large chart, the 15-minute chart, to define direction. We're using it to define momentum. We're using it to define key targets. We're using it to define terminations, guys. Large chart leads the way. I can't stress this enough. Your small chart is a 1-minute chart. This will define the immediate strength of the market. This will define entry points, guys. This is your refinement chart. This is your entry chart. If you guys will excuse me for 2 minutes, we will go into reading the large chart. Be right back. So, large chart leads the way. Slow chart, broad stroke of a brush, guys. So if you're in a TradingView platform and you're looking for the best of the best, guys, there's 3 things that happen on the large chart before you ever look at the small chart. The direction of the triggers is the direction of the trade. I am. Can you guys hear me? Give me a Y if you can hear me. It's you, right on. It's not you, it's me. Guys, your small triggers will define the direction. And it's almost too easy. If they're down, go down with them. And if they're up, go up with them. And what a simple plan to keep you on the right side of things. Now, there will be times where they're in that point and you're like, I can't tell if they're up or down. Well, guess what? If you can't define direction easily, there's probably not an easy direction to go. It's okay to wait. Once you define up or down, guys, you're going to ask yourself, where is the current price in relationship to those small triggers that are pointing up? Not the bar, not the tail, right? Not the close, But where is the market trading right now as I look at it? There's three options. You can be to the left of the triggers, whether it's up or down. The left side of the triggers is the strong side. You could be to the right of the triggers, whether it's up or down. That's the weak side. You could be inside of the triggers, and that's transition because it's neither strong nor weak. Does that make sense, everybody? What direction? Where's the current price? If you do that, this is where we start the management process on these trades. If I am left of the small triggers, if I'm strong side, this is when bigger moves happen. This is your odds favorable momentum, guys. This is when 1 minute areas are most likely to break. Not guaranteed to break, but that's where you have a fighting chance. If you're in transition, I'm taking profits at 1 minute areas. I'm getting to break even. I want you to think at medium probability. And if I am right of the smalls, if I'm on the weak side, I want you to notice the right side of the smalls. That's where change comes. That's where triggers roll. That's where trends change. So this is where 1 minute areas are most likely to bounce, guys. This is where quick profits are taken, where assertive management pays dividends. It's either strong transition or weak. This is going to set you up for management. And then finally, I ask myself, do I have room to targets? Is there room to make money from where I take an entry? And if there's not, it's okay to not take a trade. And if there is, outstanding. Let's go to the 1 minute chart and let's look for an entry. So we've covered momentum and we've covered path. Let's go define our entry. There are two entry styles that you'll take on the small chart. There's what we call a momentum trade. And a momentum trade is just that. It's relying on momentum, guys. It is solely based in a market that is screaming in the direction of a trend. Your large chart for a momentum trade must be on the strong side of the small triggers. Your small chart must have strong triggers. It must have smalls above the large. There are no large triggers on the large chart. It's too slow, but you do have them on the small, and this is your look. And if you have strong side, strong triggers, you will actually activate a limit order right at that zone at an HVA, 1-to-1s. And this is your momentum style trade, guys. And it's a very low risk trade. Your stop will go just below the zone. And this is the only time in TradingView that you're activating a limit order to enter the market. This is the only time where you're waiting for the market to come to you and you will enter directly at an area. And it's because of the momentum on the charts. Does that make sense? This happens maybe 20% of the time, 30% of the time you'll get a momentum trade. It's not a super common trade. Your most common trade, and my favorite trade, and the trade that you guys are passing evaluations with, is the trend trade, guys. And the trend trade still relies on the large chart going up. It still relies on understanding where price is to manage it. It still is dependent on room to targets. But as soon as the small triggers on the 1 minute get back inside of the large, and even more so when they turn against you, when the smalls pinch and roll, they go from up to down. The second that happens, the moment that happens, the instant that happens, you're going to start looking lower or higher. You're going to say to yourself, because the small triggers have rolled against me, I need to wait for a pullback to an area. That sounds familiar, but here's the difference in the entry. And for a long trade, I need an up bar, a bar that closes up, a green bar that closes on the weak side of those triggers that are against me, on the correct side of the triggers, as we call it. That becomes your entry for the trend trade. And if you go through the KISS plan, just like in NinjaTrader, it tells you how to use the 15-minute, how to read the 15-minute. It tells you how to use the 1 minute, how to read the entries on the 1 minute. And then it gives you those checklists again, guys. These checklists should be your lifeline as a brand new user, whether it's NinjaTrader or TradingView. These checklists tell you exactly what you're looking for a trend trade. The 15-minute is not trading into areas, room to targets. The 1 minute is not trading into areas, room to targets. Can't stress that enough. Buy or sell a close on the correct side of the triggers at the 1 minute mid banner zone. And it looks like this. Boom. You reset your mic, Wayne. Can you guys hear me? What's it doing? What's it doing, Wayne? Chopped? Cool. Sit tight 1 second. Be right back. Do. There we go, Mr. Bossy. Is that better? Dun, dun, dun. I don't know what that means, Go Glass. Awesome. Thanks, Wayne. Guys, this is what your trend trade entry looks like. As soon as the small triggers turn against you, pull back to an area, down bar on the weak side of those triggers that were against you. That's what takes you to the next area. That's your trend trade entry. The second trade in the plan, and the least common of the two, is the momentum trade. Absolutely no terminations or zones on the large chart, guys. Are you starting to feel the don't let anything be in your way vibe? 15 strong side of the triggers, 1 minute strong triggers, any pullback to an HVA line or area for entry. And again, pictures in the plan to let you know what it looks like. Break the area, pull back to the area, limit order because the smalls are up, because it's a strong side, because there's nothing in the way. Now I'm going to say one more time, these trading plans that are presented to you are the most basic approach to trading the software. They are the highest probability way to trade the software. They are the best of the best for the brand new user to learn how to read indicators, way to trade the software. You now have rules. You've been given rules. We've broken them down individually. We've learned where to find them. Everybody in the room has the ability to simulate, to practice these rules, to make sure that they're trading the correct rules. And guys, I want to say it one more time. These 3 rules describe a pattern. That's all it is. It's just a pattern, something that's repeatable. When the pattern is true, you have an edge. Trading is about probabilities. And if this pattern wins 70 to 80% of the time, it's a pattern that's obligated to lose 20 to 30% of the time, which means that every 10 trades you take, and here's the key, where the rules are met, you are likely to lose 2 or 3. Does that make sense? Does that make anybody uncomfortable? You will lose. Losses are a normal part of a positive equity curve, guys. Because of the advantage the entry gives, your losses are much smaller. Your wins have a lot more room to run, guys. But I don't want you to associate losses with failure, especially as a new user, guys. Losses don't mean you did anything wrong. Great trades will lose. But the flip side of that is that horrible, advantageless trades will sometimes win. So my goal for you guys is that you're following the correct rules, that you're focusing on a pattern, not luck, that you're focusing on the process, not the result, because it's the process that creates the edge. It's the process that creates the advantage, guys, and from the process tend to come the results. Your plans are simple. They're only 2 trades. Your job now is to learn the looks, guys, to recognize the patterns. And that's where these spreadsheets come in that I gave you. The one for NinjaTrader has strong triggers, clear path, high probability trend trade entry. It has the 3 advantages broken down individually so that you can piece them together to create a trade. There's the client trades showing you exactly what it looks like. And guys, if I click on one, it's momentum, it's clear path, it's a pullback to an area inside of triggers, and it's profits. The pattern is the same. And if you click at the beginning of the list, there's patterns from 2021. And if you click at the bottom of the list, there's patterns from 2025, and they look exactly the same. So this spreadsheet's going to help you recognize the pattern. You have a place to build your plan, and you have a trade tracking sheet. In the TV trade journal, there's your core looks. You have to fill this out, guys. You have to study. These spreadsheets aren't designed to be the end of the road and you don't have to do anything yourself. These spreadsheets are a place for you to take 1,000 pictures, to build your plan, to understand the rules. These spreadsheets are a place for you to commit these looks to memory, to recognize the patterns. I've just given you a head start because I love you guys. But the most important part of both of these sheets is the trade tracking sheet, guys. Track your progress. This is what I did. Take a picture, put it in there. If you need help putting your pictures in the spreadsheet, all you have to do is ask. What type of trade was it? How'd you do? And then, guys, the final section is feedback from class. So every time you post in the room, you're going to tell me what you saw. You're going to tell me your chart read. You're going to show me where you entered. You're going to show me where you got out. And you're going to have the best private session ever. We're going to know what you did, how you did it, why you did it, and if there's anything I can do to make it better, I'm going to give it to you. If something you didn't see, if something you didn't do, if something you didn't recognize comes into play in the feedback, put it in this section, guys. And if you come back to this section, you're going to start to see patterns that are bringing you success. You're going to start to see patterns that are causing problems for you. And if you post it in the room, you're going to learn how to fix it. Feedback is hard for people. It's hard to hear that you did something wrong. I get that, guys. I don't care for it either. But this is your new career path. This is a business, guys. And why not be the best in the business, right? So every morning, go back and look at what you did. Did anybody do this morning? What worked? What brought you success? What was the recipe for getting you where you wanted to be? And even more importantly, what didn't work yesterday? Did anybody have something that didn't work yesterday? Did you wake up and say, man, you know what? I'm not doing that today. That didn't serve me well. If you do this every morning, guys, you're going to get to where you want to be the fastest. You're going to get to where you want to be sooner than later. You're going to get to where you want to be, and it's going to be based on your ability reading the indicators. And I'm going to show it one more time. I show this almost every day. 8,324 pictures this year. We're in September, right? 2024 started in October for me, I think. So I'm almost a year in. And my total, and it's 16,000. 16,000 pictures, guys. The people that take the most, that post the most, they win the most. What's going on, John Novak? We're about to do some feedback. But first we're going to do chart reads, and then we're going to start clicking on the charts, and we're going to talk about what you guys did. So I'm going to capture pictures so you guys don't get caught up in the fluctuations. There are 3 things that I ask myself every time I take a trade. 3 things that I ask myself every time that I look at a chart, guys. Do I have momentum? Was there a clear path? Can I define an entry area? So we're going to do the same thing as a group. You just switch to TV and need help setting it up. In what capacity, Caleb? Do you have your indicators? There really is no setup. We'll go through it. We'll do that in just a minute. So guys, NinjaTrader users, you only have one chart. Do me a favor. See right here to the left of where it has it. This gives you the options for all the setups. Caleb, you can click on the 2 charts, and it should get you to where you want to be. And then John just gave you a link to tech support. You can run through it with Jason. He'll get on your computer, and he'll get you everything that you need. And make sure that you're flowing smooth too if you want. You're welcome. All right, guys. Do I have momentum? My background is red, but my triggers are green. Do you guys remember that little fail-safe, that little cheat code? What do we think? Play along with me, guys. Do I have momentum? Nope, you're absolutely right. Great job, everybody. Do I have a clear path down? Absolutely. There's nothing in the way. Do I have an entry area? I don't have any areas inside of triggers. Guys, if you go through that every time, there's no rules met for a trade. There's no rules met for a trade. There's no reason to look for an entry. There's no reason to go to a small chart. There's no reason to put yourself in a position to lose money when you don't have to. Don't have momentum. Small's inside of the large. I have room down, but now it's going up. Still don't have momentum. Don't have entry. Don't have a trade. Learn those very basics. I'm just going to skip the other chart reads, and we're going to go and start looking at your pictures and see what you guys were up to today. I believe Ron got us going. Oh, that was early. Sorry. I'm going to click all the pictures. Ron did not get us going. Paul got us going. So I am going to click on every chart posted in this room, guys. We're going to come back. I'm going to give feedback on all of it. And then this way I can be back in front of the chat box. So if you guys have questions on anything, we can cover it. And this is what the rest of the day is going to be, guys. It's going to be looking at your charts. It's going to be talking about what you did, seeing what you saw, seeing if there's a way for you to read the indicators more accurately, seeing if there was any way for you to have less risk, seeing if there was any way for you to have higher profits. And guys, I am not the trade police. My job is to look at what you're doing and talk about it. And when the market is moving slow, I like to get a couple ticks past trouble. This is Ron. It's a strong trending market. Momentum is assumed. His path is clear. And with everything pointing up, Ron jumps in and jumps out for $110 per contract, guys. And this is a chili dog trade. This is a trade that Ron created. And he created it, and he'll tell it in the room, and I love it when he does it. He created it based on his understanding of the high probability trend trade. Annotate some charts, John Novak. We'd love to know why. We'd love to know why you're doing what you're doing. He created this based on his understanding of momentum and his understanding of clear path, and he found a way to capitalize. Not everybody does, John. Not everybody does. And guys, this is where he'll tell you, base hits pay bills. Base hits add up. And he called it the money ball trade. But slow enough to post. Awesome. So let's see what we say. Here's one I love, and the rules say do not. White paint bar with trend at HVA outer band zone, and it's into a zone. This could lose, so could be our best setup. This is a nice setup for my plan. So the 15 minutes are down, strong side. Price pulls back to a zone, closes on the correct side of the triggers, and you have room to trouble. It's just a trend trade, Paul. Nicely done. Great recognition. And you had room to get there. From 30 to 19 is over $200 worth of profit before you get to trouble. Nicely done. Everything says down, pulls back. That was your momentum trade. If you didn't take the momentum trade, you could get in on the close below the triggers, and it goes right down to trouble. Nicely done again, Paul. Smalls are up, strong side of the triggers, pulls back to the zone, closes on the correct side of the triggers. You guys remember when I said that nice trades will fail? That the good trades will lose, and it's a normal part? This is one of those instances, Paul. You had all the advantages. It was up. It was strong side. There was nothing in the way. It pulled back to an area. You got to close on the correct side. It just didn't work. It happens sometimes. It's a great trade. Nicely done. Don't let the results deter you, guys. Go back and ask yourself, did I follow a plan? Oh, that was just showing us the 15. All right, let's see what's going on here. Everything says up. Oh, it's another one of those darn jump in trades. Room to the fib, get paid to the fib, let the fib break, buy a pullback to Fibonacci inside of triggers, get paid, get in again, get paid again. Nicely done, Pete. Momentum and path. Nothing to do. Termination, 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 termination. Sitting on hands. All right, let's see. Triggers were up. Looks like your entry may have been from the strong side of the triggers. Room to trouble. You get the pullback to the area. You take the close above. Now, Paul, there's two things that I see here, and this was kind of cool. This is the second day we get to see this lesson on two different people's charts. Actually, no, you're good. It looks like that was the bar that you chose to enter, waited for the close, and you get in. The only thing wrong with this trade that doesn't fit the rules, I won't even say wrong. The only thing that doesn't fit the rules is the room to targets. The second thing on the spreadsheet that says make sure you have room to make money. Now, Paul said, and we talked about this in the room, Paul said, I'm on the strong side of the triggers. 1 minute areas are more likely to break. I'm going to take a calculated risk. I'm willing to trade into this based on the strong side of the triggers. And it didn't work out. And he made a choice about room to targets. His choice didn't work out this time, but it was calculated. All right, guys, here's what I want you to focus on. Momentum. All the momentum in the world. Strongest triggers ever. He lets it get above trouble and enters. Gets paid quick because it's only momentum. When it starts to pull back to the area inside of triggers, man, they head faked you. They head faked you. You had that buy stop market in there for momentum, but the momentum is gone. And it turned into a trend trade. And then you get paid again. And it turns into another trend trade. And you get paid again. And Wayne said, hey, guess what, guys? 20 minutes of my life on gold, relying on momentum, understanding clear path, using the small chart for entry. I'm going for a walk. A full day's profits, over $1,000 in 20 minutes. Wayne, beautiful trading. It's heads up trading. They got you right there, though. Those sons of guns. I think you just had your limit order in there. Probably because it was moving so fast. Outstanding. Outstanding. Ooh. Who is this? Who am I looking at here? Help me out, guys. This is Wayne? Okay. Thank you, Trina. Smalls are down. Looks like he's strong side of the smalls. Nothing but room down. And let's see what he did. Went short from the zone, got paid at the zone. Close on the correct side of the triggers. So more of a breakout to trouble. And then I guess when it started bouncing up, close on the correct side of the triggers. Very counter trend. Nothing on the large chart says up, Wayne. I don't know if you're listening. And Wayne says, I'm going to capitalize on the move inside of the move using momentum. And you do it really well. You do it really well. So there's going to be a point when you guys have some experience, when you trust momentum, you may find the moves within the moves, guys. It doesn't fit the KISS plan going up. Going down was beautiful. And Wayne said, yeah, but I'm good at this, Mark. I've studied. I participate in the room. I've posted thousands of pictures in here. And we've talked about everything. We've talked about everything. I found a way to make more money. Great job, Wayne. Andy, I loved this trade. Appreciate you, Andy. Guys, this is all the momentum. 3 triggers through. Potential to break. And Andy, you had it waiting and you said, I'm not going to fight the small triggers. Let me get in on the close above. Beautiful. And then when divergence printed on your potential, you exited. Perfect management. Andy, there is nothing on this chart that I could find one flaw with. You took the perfect entry with all the potential to break, and when the market told you it's not likely, you jumped ship. I mean, high fives. High fives. There was no reason. Everything about this is 100% pragmatic. Everything about this is 100% logical. It makes sense. There's no emotion dripping all over it. And guys, great trades fail every now and then. Absolutely beautiful, Andy. These are the things that excite me. And just, it's silly, right? Don't tell my wife, I guess. When you guys take lessons from the charts you've posted, when you guys take little tidbits that we talk about, and then you come back and you show me how you did it better. You show me that when I cry about chart annotations, you post one with annotations. John Novak. Sibling rivalry. Man, I love it. I do get excited. And Andy, I love everything about that, man. Because you took the lessons. This was a total home run. Momentum and path, strong trending market, 30 plus bars, railroad tracks, clear path. Enter with confirmation. Hit the 10-tick target but didn't fill. So let me add on with this look. I love this. Doubled up, paid at trouble, out on the way to the fib. Beautiful trade, Pete. Beautiful trade. All right, Miss Jen. Oh my gosh. Jen, we took the exact same trade. Strong triggers, room to trouble, below the trouble, everything's perfect on the large chart. Jen's like, I'm not entering on this bar. That's ridiculous. It's right into a zone. But with all the momentum, and Jen, I had the same zone. You get in with the close below, and you get paid. Absolutely beautiful. Great minds think alike, right, Jen? I think I took the exact same entry and might have made just a little more money than you. Nicely done. Nicely done, Jen. Well, I had the privilege of paper trading, and I think I was in at 75, right below it, which made it a little easier, but absolutely beautiful. Great job. All right, Paul, let's see what we have. Entry was short. Thank you for the arrows. When it's one bar, sometimes it's hard, right? So triggers down. Transition. Getting below trouble at 75. Nice. You take the close below. No room. There's that recurring theme, Paul. No room on the trade, and you get a big bounce, and it takes you out. And then when you get below the trouble, trouble protects you, and they just don't go, those sons of guns, and you have to manage out of that trade. I like your second entry just a little bit better, Paul, because you're not trading into, you're trading away from. And they just didn't want to go. It was early morning pre-market, and it was a tough one. And then the one I missed, thank you, Ron, the pirate trade. Guys, read the message on there. Counter trend trade, white bar really shouldn't work trade. I love this because this trade fights, but it's rooted in understanding. This is not jump the fudge in, but when the look is right, it wins more often than not. Test it, prove it, work it into your plan. It's all about indicators. High probability trend trade, and Mark taught me how to read them only when I started to see crazy trades like this. You're going to blame it on me. Nicely done. Guys, when you can't go long anymore, Ron said there's this pattern. Right at trouble, with divergence, I can take a trade counter trend, and it typically gets to the white reversal bar marker. John Novak, you should study this one. You love going counter trend. And guys, it's a quick hit. It's 11 ticks, base hit backwards. This is Ron's pirate trade because it's counter trend and against momentum. And it's the perfect pattern. Nicely done. Nicely done. Where are we? Dun, dun, dun. You have enough issues. No chili dogs or pirate trades. Pete says, my hands are sore from sitting on them since 4 a.m. The most successful traders you'll ever meet, guys, do absolutely nothing when there's nothing to do. Pete, nicely done. But when there's something to do, when it breaks out of that range and it gives them momentum, you better believe Pete is ready. He tries the momentum trade. It turns into the trend trade, and he rides it down and makes the money. Nicely done, Pete. Momentum and path, guys. It's ridiculous how often momentum and path pay dividends. Moving fast, fear of missing out, jumped in at pullback without areas as divergence prints. Risky but sat still. Who did we get here? Is this Cav? I'm not sure. Odds favorable momentum and absolutely nothing in the way. Oh, Miss Trina. So Miss Trina, everything says up. Everything is strong. And you jump in on the way down without anything to bounce from, right? Fear of missing out. That's okay. So Trina, just a thought, food for thought. And let's do two things. First of all, what's this chart doing for you if you can't see anything, right? What is this chart doing if you can't see anything on it? With all of these advantages, odds favorable, clear path, you're going to find a way, right? And then John mentioned it. If you're just going to do it, those little one-to-ones can help sometimes, especially on gold. You had a mid-band. So two options, right, Trina? You can jump in and hope, fear of missing out, totally you're right. Or one of the things that I like to do is let it at least start in the direction. Let it at least start back up with these advantages. Because what that does for me, Trina, and what it may do for you if you choose to exercise your right to use it, is it gives you a pivot to put your stop behind. It gives you some place to say, okay, the sellers failed, the buyers took back over. Let me put my stop behind that pivot. So it gives you a little bit of a management plan. But with large chart advantages like that, it's hard. It's hard to do something wrong. Great job. And then there's the same look. Odds favorable. Everything down. Nothing in the way. Jump the fudge in. You let it get below trouble, and you just take it. Trina, nice job. Welcome back. Welcome back. All right, John Novak. You guys want to critique my big brother? Best chart reader I've ever met. Strong triggers, clear path, hold it. John, strong triggers, clear path. Well, that's the same thing that we teach the new users. Pull back to an area inside of the retracement zone. Didn't get out with second divergence. Up, up, up. Nice trend trade, John Novak. Everything we teach, you just did. There it is for real, getting in on the way up. Zero risk at a fib. I hope that turned out well for you. You can't lose, let it run. You can't lose, let it run. And then let's see, counter trend trade, Ron, we saw that one. Awesome. So there's our first run of pictures, guys. S&P's working its way up. Two triggers are through. Waiting for those advantages to come through. Crude is just exhausted. They're not doing much of anything, right? Indicators are still up. The market's still going up. No easy way to catch an entry on that one. You guys want to do a trading view read? Woo! All right, guys, let's do the trading view read. My small triggers up or down, guys? What do you think? Let me get that off of there. Up or down? Does anybody want to play along? They're down. All right. Am I strong side? Am I weak side? Am I transition? Transition. Most current price inside. I like it. Do I have room? We're actually transition, Trina. Thank you for saying that. So Trina, this is where you're going to have to lose your NinjaTrader thought process. So we don't even use large triggers in this workspace because it's just too slow. So Trina, the triggers will either be up or down. Thank you for saying that, because guys, this is how we all get better. And you've been gone for a while, so you probably haven't heard this. The question that you ask next is, where is the current price in relationship to the triggers? And you'll see it highlighted. And then there's three options. It can be left of the triggers, and it has to be completely left of the triggers, in which case it's the strong side. That's your odds favorable momentum. It can be inside of the triggers. That's your transition. That's when we're getting our management hat on. And then it can be weak side. And Trina, it's still an up trade, but this is where you're going to manage really assertively. Does that make sense? I'm telling you guys, when you answer, no, okay. Does it make sense? Okay. So see how the most current price, that bar is kind of inside of those small triggers? That's our transition look. And what it tells us is, hey, I'm still looking for shorts, but I'm going to be ready to manage. And then the final question, is there room to targets, guys? There is the next sign of trouble. Does everybody see it? If you took a short, there is room, but I want you to recognize that they've already reached it twice. So you need to be hyper aware. You need to recognize that they may have already gotten to where they're going, and they've worked to transition because they're done. I'm missing some zones. Let me reload, Miss Jen. Room down, not much. And then Trina, that's just the large chart read. Jen, it doesn't look like I have them. So if I took, there it is, not much at all. So if I took the pullback to the area with the close below, I have to be aware of trouble. But guys, that was your trend trade, and your trend trade is going down. Do you guys see it? So it wasn't much room at all. You're absolutely right. But that was your close on the correct side of the triggers. And if you were in at, what is that, 27? 27, you had 9 points to get to the zone. You had 9 points to get to trouble. That's $180 per contract. It fits the rules. Does that make sense, everybody? Did anybody catch that one? And look at this. As it pulls back, no close, no close, no close. There it is. No sound. Oops. All right, guys. Can you hear me now? I'll get my screen back up. Better? Cool. So guys, all you have to ask yourself is, does it fit the rules? Does it fit the rules? Does the down, does the transition, does room to trouble, does close on the correct side of the triggers, not trading directly into something, does it fit the rules? Is $180 per contract enough for you to be willing to take this trade? And if the answer was yes, some of you just got paid. And if the answer was nope, I have to have over $200 or I refuse to take the trade, then some of you chose not to take the trade. But that's your choice. That's your choice on whether or not you're willing. But guys, that fit the rules 100%. 100%. 8 ticks. Counter trend all day. I don't know what you did, but boy, I like that you're making money. One chart, no annotations, 8 ticks. I can't do anything with that. You know that. But great job. Way to make money. And guys, you know what that is? That's the, hey kids, you can make $2,400 in the morning once you have your own plan. Nicely done, 8 ticks. All right. Small versus large, up, up, up. Pull back to the area inside of triggers. Money, 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 money. John, nice job. Guys, this is what John used to call the apology trade. Fibs and one-to-ones are a kick-ass target. That is a technical term. But guys, does everybody see? Oh, I love this pattern. I want you guys to recognize this. This is next step, but this is what happens when you start the process of becoming John Novak. Does everybody see the weak top? Not a termination. It just kind of reversed from the middle of nowhere. And from the weak top, that potential to break with only 2 triggers is less likely to break. Do you guys remember that lesson? 2 triggers isn't the best. 2 triggers is more likely to fail on the potential to break. Are you guys with me so far? And then the small triggers absolutely rifle up, and there's nothing in the way. This is what John Novak used to call the apology trade. If you lost the short hoping that it broke, it gave you the long because that's where they were headed, and that's the apology trade. And John Novak, you did it better than anybody. Doesn't have strong triggers yet, but it is a failure, and then your small chart telling you the failure happened, look for an opportunity. John, just picture perfect. These are the things that are really cool. The more you get into chart reading, the more that you see, the more that you're like, oh my gosh, this pattern keeps repeating itself. Last spot for down, take money at the termination. This is a low as a 15-minute termination on TV, also a termination on a small chart, 3 divergences, 1, 2, 3, right at a fib, higher divergence. There's your breakout move, perfect entry, out. I love it. And guys, remember when I said when this one fails, there's your apology? This one failed. There's your apology. I mean, just a thing of beauty, John Novak. One day, I'm going to let you teach this classroom. How I probably trend trade is not your get rich trade, blah, blah, blah. Nickel, please. I don't think you can say that. Strong triggers. All right, whose chart am I looking at here? This is Miss Cindy. Cool. Only one thing that I want you to see, my dear. Not a clear path. Do you see that divergence high? 2 triggers through. So this is going to be the potential to break. That's okay. With all of that momentum, with the potential to break, your small chart is perfect. Absolutely no divergence. Strongest triggers you could ever hope for. Enter on the correct side of the small trigger so you don't get run over. And out at trouble. Beautiful. Miss Cindy, I'm not sure you could have done this any better. Nicely done. Boaz, would you type that one more time? What is the extra end in John Chot Boyum? I'm not sure what that means. What is the extra info in John's chart? What do you mean the extra info? Cindy, perfect. What extra info? Help me out, Boaz. I'll get you the answer, I promise. This chart? This chart? He's talking about, because he only posted one chart, he's talking about other indicators on other charts that he used. I'm sorry. All of this? It's the automated system. This is the grid letting you know if your conditions are met for the system to take an entry. Those are all the conditions. Nexgen and John Novak, more specifically, with the help of his programmers, has programmed an automated system that when the rules are met, and guys, do you want to know what that entry is based on? The best of the best, the highest probability. And what he did is he automated entries. So when the rules are met, it'll produce a signal. It'll get you in the market. And then with a little bit of discretionary management, using things like exit terminations on the one-to-ones, it's pretty awesome. It was fun to be a part of that one. And it just keeps getting better because you guys keep giving feedback. John, how about this? Let's see this. What is this? And then this is what his trades look like over here. There is that last short, right to trouble. And then here comes his long. So kind of cool, guys. Whether you're NinjaTrader, whether you're TradingView, they don't always line up. But when they do, money. Nice job, John. Making me proud. All right, Miss Cindy. And there you go, Boaz. When the rules are true, it initiates a signal. There's her entry. There's her profits. When divergence prints, right at trouble. There's your discretionary opportunity, right, Cindy? When you reach yellow one-to-ones, it's okay to get paid. That's the discretion. Profit should be protected at fib, absolutely. Large chart terminations, but it's the perfect entry, the best opportunity, and it went right to $12.50, right from $22.50, so that's $200 a contract. Could have been an $800 trade out, but you still made $200 and covered yourself. Beautiful. Beautiful. DSD server Mark. John has done a lot of videos. He's done a lot of one-on-one sessions. Maybe it's time for another one. Andy, repost it. Let's revisit it right now if you'll repost it. There is constant talk in this room, in Traders Chat. Let me find Traders Chat. Going through, talking about settings, talking about the automated system, talking about what he sees, what he does. It's coming from all the different Nexgen people as well. And then there's videos that have been put up on, I'm sorry guys, sometimes I miss trades. If I missed your trade, do me a favor, repost it. Miss Trina, wonderful to see your face in here. Can you guys hear me? Anybody? Nobody can hear me? Man, Discord has given us fits today. What's up, dog? Alright guys, I'm coming back. Hopefully you can hear me now. Give me a Y if you can hear me. Please and thank you. Awesome. So we're back. Sorry. So I don't know when you guys lost me. I have no ideas when you lost me. Mark, I'm going to skip all the letters before your name that said I don't hear, or that asked about automated system. Hey, Jeffrey. Oh, yeah. Man, I missed that. There is tons of chatter over in... Boaz, will you repost for me, please? Thank you so much. If I missed your picture, guys, it means that I somehow skipped over it, and I didn't mean to. So if your picture has not been reviewed, please repost it. So over in Traders Chat, there's a lot of chatter about it. John Novak has made videos on discretionary management, on settings. If you go to, whoops, let me open this up. If you go to the Fibonacci page, our home website, and go to trading guides and go to indicators, and I'll give you the link right now. There's videos in here as well, talks a little bit about it. And what it is, guys, it is it's really taking all the heavy lifting out of entries. It's giving you the best of the best scenario for entries, and then using what you learned with us to manage a little bit. So good stuff there. Andy, let's take a look at your winner. Miss Cindy, did you get all of your praise and feedback? Nicely done. I've lost it. I want to make sure that you got your feedback. You're welcome. I'll answer what I can. Guys, John Novak is the tech guy when it comes to this. It's his baby, without a doubt. And he can speak so much more intelligently than I can because he's gone through every nuance, every tech bit with it. Andy, 4 triggers through, all the momentum. You entered at the area inside of triggers, and you took 2 off somewhere here, 1 more at the target, and then you used the trailing stops and took it all the way down. Absolutely beautiful. Momentum, path, pull back to the area inside of triggers, Andy, and look at how he used a trailing stop. He said, I'll let it give me a pivot, but when it looks like this, we're probably going lower. And just beautiful, Andy. Perfect trade. I mean, the perfect trade. Nicely done. And great management, great hold. Beautiful. All right, Boaz, were you going to repost, or do I have to scroll up and find it? And whatever, I'm cool either way. I'm not sure where I missed it, though. Oh, I missed one from Shane, too. I'm sorry, there it is. Shane, don't let me get away with that. I got you, Boaz, I found you. I found you. All right, Shane, I have momentum and a clear path. Okay, here's your large chart. Entered and managed trades. So you took the pullback to the 1-to-1s to get in? That yellow's tough, but I like it. So it looks like you entered a lot later than the pullback. Am I reading that right, Shane? Or is that where your system got you in? Are you with me, Shane? So the only thing I can say is this is an amazing way to use the software. Once it starts to go in the direction of your trade like that, you can reduce some risk using pivots. Another pivot, another stop, another pivot, another stop. And then when you start getting all those divergences, another pivot, another stop. So you can literally use small chart pivots to chase, protect. Nicely done, Shane. And then Boaz. I knew it was a winner. He wouldn't have even said, hey, you missed it. Small triggers, almost below the large. A lot of triggers through, not quite a clear path. Because the area was on the wrong side of the triggers, you wait for the bar down. It went quick, I guess. You get in a little bit late, but you're good. And you get paid, and you're like, everything is perfect. Why on earth would I exit the second contract? And then you get paid again. Boaz, beautiful trade. Really nicely done. Momentum and potential, beautiful entry, making it all the way down. Solid trade. Pete, momentum, path, jump the fudge in, make some money. Nicely done, Pete. You entered at the 1-to-1s, not below the 1-to-1s. But with nothing in the way over here, with a strong top, with the reversal, with the momentum, if I'm taking a chance, Pete, it looks just like that. Beautiful. Beautiful, beautiful. You guys are amazing. That's all the pictures. Yeah, but one tick below. So this will be for new users, guys. And I'm going to show you why one tick below tends to be harmful. I'm looking for just a good example. Um, any line on the small chart can create a bounce. And it happens a lot, guys. One tick below creates a bounce. Couple ticks below creates a bounce. Just a little bit below, not all the way through, creates a bounce. Once you're below it, it's straight line. Pete knows this. And guys, remember that when you're looking at people's trades, it's not a matter of being the police. If you look at the big picture, termination, right at a fib, pivot, stop out, reverses the market, strong triggers, 3 divergences, odds favorable momentum. I mean, I challenge you to find anything wrong with looking for a short opportunity. Pete says, you know what? Those are my 3 ticks, 4 ticks. I'm willing to take this shot. And I don't blame you. Not a bit. It's gorgeous. That is a trade rooted in advantages, just based on everything good he could ever hope for. And if this were a bar fight, we haven't used the bar fight analogy in a while. If this were a bar fight, 1 tick below, all triggers stacked, it lessens the chances, yeah. Let's look at what Pete had working for him. He had a termination, a full reversal, odds favorable momentum, trading with the trend, 3 divergences, both sets roll, odds favorable momentum, room to trouble, and the only thing that Pete had to worry about was that 1-to-1. So Pete, you know it's always better to fight with the drunken rugby team than against them, right? And you had the whole rugby team behind you. And guys, that's kind of what day trading is. It's let me count my advantages. Let me see what's working against me. Is it worth my money? Is it worth my money to break my rule a little bit? And that's where discretion starts to come in. That's where discretion works its way into your plan. And there's 2 types of people in day trading. I'm going to say this real quick, then I'm going to take a little break. There are 2 types of people in day trading. There are people that are very comfortable adding discretion in the moment. And they do a beautiful job of it. And they really do nice things with it. And then there are people like me that discretion destroys a day. And guys, my opinions have been proven in scientific laboratories to be wrong 99% of the time. My hunches, my gut feelings, I suck at them. I don't know why. I just do. And my opinions cost me money almost every time I incorporate them. True story. So for me, because it works for me, because my trading is my trading, I have to be super black and white. I have to have a checklist. My checklist has to be true, and then I'll enter the market. And guys, for me personally, this is how I find success day trading. And when I deviate from what I know works, I tend to lose. That's my own personal plan. Now, my older brother, some of you may have heard of him, John Novak, we chat all day. We are in teams all day long when we're trading. We'll trade the same markets, the same charts, the same things. And very often, John will say I'm short, and I'll say my rules aren't met. And John will say I'm long, and I'll say my rules aren't met. And it's not that he's right and I'm wrong, or I'm wrong and he's right, guys. You have to figure out what works for you. And for me, black and white, complete gospel truth, stick to a plan, keeps me out of trouble. Not everybody's like that. Some of you are pretty freaking amazing and pull things off because your brain thinks like that. So I just wanted to throw that out there. There are no right or wrong trades, guys. There is no good or bad. Jen, why did you delete that? I should have clicked faster. There's only what's right for you. There it is. I see all. So let's see what you did, Miss Jen. Dun dun dun. Strong side, hit time, no room to the outer band. It's actually transition, right at the outer band. No room to trouble. And Jen, did you just say, you know what? it doesn't really work for me. I'm not going to enter on a 20-point bar directly into trouble. I'm not going to enter directly into trouble. My outer band is there. Sitting here talking to Hunter like you talk to John. But it helps, doesn't it? Guys, here's the deal, is you're going to get smarter every day. You're going to see more every day. You're going to do more every day. And the more you learn, somebody correct me if I'm wrong. The more you learn, the more you see, the more you do, the more likely you are to insert your opinion into your trading. Trading your opinion rather than your read, right? Trading what you think is going to happen rather than what your indicators say is most likely to happen. It's tough. And I'll tell you, I had to take a lot of losers with my opinion. I even tried to, because John Novak does it flawlessly, I tried to trade both platforms at the same time, and all it did was make me choose whichever one gets me into a trade. And I was losing a lot of trades. And Jen, you not trading into trouble, once again appears to have kept you out of a loser. Nice job. And it is bouncing off the outer band, right? And now it's back above divergence, and you're just caught in between. And I watch you guys all day long, and I see the things that you guys do that are amazing, and I see the things that are costing you money. And if you just post in the room and listen to the feedback, guys, we'll identify every challenge that you're having, and I will help you with a solution to fix it, I promise. And the only time you make a mistake, Jen, is when you're not patient. Well, I say it must be nice to be you, because I make them all the time, even when I am patient. In all of my life, I like that you caught that. Miss Claire, it's nice to see you in here. I saw you sneak into my room. All right, guys, I'm going to walk away for a few minutes. Oh, Ron, hate to do it. Love being in your room, but outside just hit 82. Going to tee off at noon. Nice. Y'all listen to Mark and John. They know what they're doing. Thank you for that. See you on the morrow. I like it. Hit them straight, Ron. I am so close to fixing my swing. I'm going to be ready to play with you when we come up the East Coast. There is a way to trade money from NinjaTrader and TradingView. I don't know. That would be a broker question, but let's log out. Is there NinjaTrader up here? Forex, NinjaTrader, Edge, Clear, Tasty. There it is. There is NinjaTrader. You could try, Victor. Hook up your NinjaTrader account to it. You can't do the prop firm like it. You can't use the prop firm with NinjaTrader. But yeah, cool. Little something something. Oh, I'm sorry, Andy. I promise I never skip you on purpose. So strong triggers are down, or triggers are down. Weak side of the triggers, room to trouble. As the market pulls back to the area, there's your close on the correct side. It just didn't work. Andy, it just didn't work. Do you feel good about the trade? I would. I'd feel great about this trade. It's just a normal part. It's a cost of doing business. The sooner you guys realize that great trades will fail every now and then, it takes a lot of the stress. You don't have to be right. You don't have to know what the market is going to do next. Par 72 course, hit it hard, go where it went in the woods, throw another one down, hit it. No one has to play through. Plus the clubhouse now serves chili dogs. Life is good. Amen. I played 9 holes yesterday. And man, my lessons are finally kicking in. I played on Sunday with a buddy of mine and shot 105. And it's kind of a good parallel. And John Novak sent me a message yesterday about the parallels between golf and trading. Is they both take a little bit. Jen, have you still not had a chili dog? Jen, we're growing apart right now, you and I. Like we're drifting. It's like we're on completely different continents right now. I need you to do this. I need you to go. I'm going to go to Amazon, Europe, and I'm going to send you the fixings for a chili dog. It'll change your life, Jen. Ah, there's ways around that. We're going to get you some black market chili dogs. Only fish and chips. Chili with slaw, Victor, just go away. Don't be gross. Actually, that's pretty good stuff. All right, Boaz, I'm sorry. Here we go. Momentum. It's starting. No clear path. I'm trying to think. You went short. Hoping for the continuation. Good looking entry. When divergence prints, that was probably your key to get out. That higher pivot with divergence. It's a great entry. The only thing I might say is 2 ticks behind the reversal bar, Boaz. Don't give up so much, right? Especially when your large triggers are flat. You're really relying on the small triggers here. But everything about it's nice. I mean, you even had a signal. It just didn't go. So again, we're seeing it. We're seeing great looking trades that don't always win. And I think that it's important to see that. And one of the hardest things you'll ever do is not care whether you win or lose. But you will get to that point. There's no doubt in my mind. You will get to the point where you don't care if you win or lose because you've spent the time to test your methodology to prove that you win more than lose. And it's just a matter of numbers. It's a matter of probabilities. And I'm going to give you guys real quick Mark Douglas ideas. I love sharing this because I think that a lot of times it's easy to get wound up about the losses, guys. When you stop expecting to win every trade, you will start winning most of your trades. And I don't care about the result. I care about my execution of the method. And if the method is sound, if you go back and you prove this wins more than it loses, and you stick to the plan, you know that over time, you're probably going to win more than you lose. And guys, that's how you make money. Andy, you don't like beer battered cod? Man, I love the English chips prepared properly and fried fish. I don't know. I like hillbilly fish and chips. Give me the beer battered cod. Drop some Tabasco into the tartar sauce. None of that malt stuff. I know. I love it. Is it different in Europe? I imagine it is. There's always those subtle differences. Always the subtle differences. Like each region has their version. Up here in the Pacific Northwest, they take rockfish with the most horrible batter ever, in the oiliest, nastiest, greasiest, grossest. It's the fish here are sad, just like the people in the Pacific Northwest. No offense, people in the Pacific Northwest. Down, transition, room for days, pull back to the area, close below, getting it back. Nicely done, Andy. The next trade's coming, right? So what if you lost? The next trade's coming. So what if it didn't work? The next trade's coming. So what if you've been sitting on your hands for the last 20 minutes? The next trade is coming. And guys, when you believe the next trade is coming, patience grows tenfold. Great job. All right, guys, I'm going to walk away for a minute. Nowhere to go on the NASDAQ. Did you guys know that when you hit a mid-band and the large triggers are a full bar away, that's a termination condition, which means no more shorts? True story. True story. When the large triggers are a full bar away. Does everybody remember that price returns to the midband? That's how you define a midband as a termination with that regression of the mean, which means this short will be short-lived, and it was. Pretty cool. All right, guys, I'm going to walk a lap. I'll be back in just a minute. I'll leave you with crude oil. Let's see what they do. If you have a picture, post it. If you have a question, post it. If you have a need, express it. If you have a want, let me know what it is. We will do everything in my power to make sure you get whatever you need. So post them up, guys. See you in a minute. Home stretch. Whew. I guess the mid-band as a termination condition works, doesn't it? Egads and little fishes. Guys, what do you want to talk about? Excuse me. What can I do for you? Let's just do large short reads, I guess. There's your termination. It reversed the market, created odds favorable momentum. Are you guys good so far? Strong triggers, 2 triggers through. That weaker potential to break. If you wanted to trade that potential, you would know without question where the market is most likely to retrace in the event of a pullback. You would know without question where the market is most likely to bounce in the event of a pullback. You would have everything that you need to take that potential. Now, for me in this room, I'm not allowed to take that trade because my trading plan says if it's the potential to break, 3 of 4 triggers must be through, which means that I don't have my rules met until a large trigger gets above there. Does that make sense, everybody? This is that patience piece. This is that 90% of the day. My plan says I need 3 triggers through, and until I get 3 triggers through, I'm not looking for an entry. That's my plan. Doesn't have to be your plan. Look at this, and now there's 3 triggers through from a termination. Strong triggers, strong triggers. If I get a pullback, that Fibonacci support represents the point where the market is most likely to bounce and continue with the direction of the trend. Does that make sense, everybody? This is before I ever get a reversal bar. Now there's one condition on my plan that would keep me out of this trade, and that would be divergence on the 5-1. So if divergence is true, I'll cancel my order unless I get 4 triggers through, in which case one divergence doesn't affect the plan. So we're just waiting for a reversal bar, guys. Does this make sense to my NinjaTrader users? This is what we talk about for the first hour every morning. This is momentum. This is potential to break, and it just keeps getting better and better. And this is defining the point where the market is most likely to bounce. And guys, it is that wide. That's it. That's the only areas inside of triggers. The only thing I don't have is an entry yet. Big Rat, does it make sense? I know you're back looking at it again. Who else is on NinjaTrader? Might need a little help. And if I get 4 triggers above that line, I don't even care about the divergence. Guys, this is kind of what we discuss every morning. First, it's momentum. Then we define our path. And then we see if our entry rules are there. They're trying. The only thing that would keep me out of this trade is if divergence prints. If divergence is true, I will know about 2.5 bars down. If it is true, I have to cancel my order, guys. If it's not true, we're going to take this trade and we'll put our stop 5 ticks below the triggers where the market should not go. Are you guys with me? Are there any questions about what we're looking at? There's divergence. I have to cancel. I had to cancel. Not all of you have that rule, but my plan says no divergence on the 5-1. It's very black and white. Why is that my rule? Because divergence is a loss of momentum, and I'm relying on momentum to break it. And as a brand new user, as a first-time user, as somebody that doesn't have all the experience to make decisions on the fly, that plan is designed to optimize my chances of success, to give me the highest probability on this look. And as a brand new user, I choose not to take that trade. Does that make sense, everybody? I feel like I'm talking to myself today. Let's see what happens. Let's see if divergence affects it. It could go up, right? It could go up. But my plan says don't take the trade. That's it. And I am a slave to my plan. And this is where my brother would say, dude, it's only 8 ticks of risk if you get in at the fib. Is it worth it? Well, that's up to you, right? That's up to you. I don't make trading decisions for you. I refuse to. I don't need that responsibility. I had to raise 2 children. That's where my decisions went in. But what I've done, and what John Novak has done, and what we've done collectively over the years, is take 500 pictures. 500 pictures of this setup right here. And more often than not, that divergence creates a deeper push. That's it. That's all we're saying. So for probabilities, not my trade. Let's see if we can find an example. There were 2 triggers through, down at the bottom, whoops, at 504. Let's go back to 504. Nope. That was just 2 triggers, didn't break, didn't even have divergence. 3 triggers back in the middle of the night. No areas inside of triggers. Rules keep you out. Strong trending market, that makes it a little more difficult. They're still not bouncing up. Do you guys want to stick this one out and see what happens? Or do we just want to go someplace else and revisit? Smalls, below the large, space between, no divergence. There's your first pullback pushing down. We'll see if divergence prints. Cindy, you want to watch it? Let's watch it. Does everybody understand the initial read? You do have momentum. Rule number 1 is met without question. You do not have a clear path. It's only the potential. And because of divergence, the KISS plan says don't take it. Pete, with all this momentum, probably went long about right here and got out up there. Should we see? No, different look, huh? Trading the S&P, Pete? Don't even know you. Potential to break, jumps in with momentum, turns into a momentum trade, out. Nicely done, Pete. It threw me off. You're in the S&P. Threw me off. Mark, how are you doing? I've seen you try to type a couple times and delete it. I like the S&P. I like the S&P and crude oil on Renko. I think is very, very tradable. I think NASDAQ is a little fast for new users. But I think on TradingView, NASDAQ is very tradable because a minute bar is a minute bar. The one thing that you'll run into, and some of you may have experienced this before on the NASDAQ using TradingView, is that when the market is extremely volatile, you can have 20 or 30 point bars, which really does ramp up the risk, and you've got to be aware of that. They still haven't bounced up. They might. We'll see. We're going to see if my plan kept me safe or kept me out of a trade. My dog is going nuts up there. Somebody's trying to exist in her world, I think. Here, we'll come back to this one. We'll see what happens. NASDAQ says down, transition. We are outside of the outer band, so there's room to the next area. Just no entry yet. Let's see what this crude oil says. This crude oil says up, strong, above trouble. Still haven't gotten a close on the correct side of the triggers for potentially more up. Not trading from an area. We'll have to see what happens if they decide to push lower. I don't know. I never know what's going to happen, but I know what's likely to happen, right? I can say because of this read, this is a potential outcome. Because of this pattern, I can recognize a pattern that is proven to win more than it loses. I can recognize a pattern that gives me an edge. That's all it is. That's all it is. And they're just stuck. They're making decisions. It's not a coincidence that the market isn't going up or down. Do you know what causes that? Someone asked me once, Mark, why is it stopping in the middle of nowhere? Perfect, Mark. Great question. Guys, buyers and sellers create the movement. That's it. And we know where they're most likely to fight. So on your small chart, Mike, watch this. Actually, I won't even take the picture. If I put a circle around my large triggers on the large chart, if I actually use the drawing tool from that chart, the stepped triggers over here are the large trigger, large chart. So what it is is when you're looking for an entry, and watch this, if I put a box around the small trigger or the large triggers on the small chart, these trigger lines are used on the entry logic because price returns to triggers. It's a regression of the mean. It's just a moving average and things come back. So what you'll do is you'll use those large and stepped, and that's going to define where that retracement is most likely to go, where that retracement is most likely to occur. So sometimes you'll get them really tight on top of one another, and that's going to increase accuracy dramatically because all we use the trigger lines for is defining the most likely pullback spot, where the market's most likely to retrace. And then the entry, the rules for the entry say that I will buy or sell a pullback at an area inside of triggers. So what you're doing with this methodology is you're saying, okay, if I get the pullback, I know exactly where it's most likely to go using the triggers. I know exactly where it's most likely to bounce using the areas within the triggers. And that's what created the ricochet here. Do you see it? Pulled back right to the area inside of triggers, and that's where it began to bounce. So all it is it's a pattern. And by having the large triggers from both charts, you increase the accuracy. And you'll see it a lot on the large chart where price pulls away, returns to the large triggers. It looks like a tail on the large chart. Price pulls away, returns to the large triggers. Price pulls away, returns to the large triggers. And what that is, and let's go back to the small chart, is it's that same entry pattern, right back to an area inside of triggers. Does that make sense, Mark? So when you're talking about, where was that one? 1313. There it is. So everything that we teach, this is what we call a high probability trend trade. It's like a flow chart, if you will. Exactly. So what the stair steps are used, the synthetics, they are used to help you define the retracement zone. So on this particular look, Mark, and let me just take a picture of this and we'll do it. When this reversal bar printed right here, let me make that easier to see. I knew, and this is the language of entry, that the market is likely to retrace somewhere from the bottom of those triggers to the top. And there's two sets, and see how big that space is because of the separation. And that's all the triggers are used for, to define where the market is most likely to retrace. So I'm just going to say it's likely to go all the way up there. That's the first step in defining entry. But areas, whether it is a fib, a mid band, or a yellow 1-to-1, inside of those triggers, that's where the market is most likely to bounce. So we decrease the size of where the market is most likely to ricochet, and your limit order will go just below the lowest point. And you'll know fully that it could still go up to the top, and you'll put your protective stop. But this entry right here, right off that mid band, that was your highest probability trend trade entry. That was the best of the best. That was the perfect trade. So there's an order of operations that goes through. First it's momentum, and then it's path, and then it's pull back to an area inside of triggers. And if you learn the language and you learn that flow chart, and if you learn the entry language, you know what you're looking for when the market's all the way over here. You know long before that retracement exactly where you are willing to enter that market, because it's always at an area inside of triggers. Does that help a little bit? And then it's just a matter of repetition, of seeing the pattern, because that's all it is. So in this spreadsheet, I'm not sure if you've downloaded it yet. I just dropped it in the room for you again. One of the things that you'll notice is almost every trade. First it's momentum, potential to break, pull back to an area inside of triggers. And that was from 2022. And then first it's momentum, potential to break, pull back to an area inside of triggers. And that is from 2022. And then it's momentum, and it's a clear path, and it's a pullback to an area inside of triggers, and that's 2023. And then it's momentum and potential to break, and a pullback to an area inside of triggers, and that's 2023. And I try to stress every day that it's just a pattern. That's all it is. It is just a pattern. So you learn the pattern, momentum, path, pull back to the area inside of the retracement zone. You learn the pattern, and that's what creates the edge, and that's what creates the advantage. So that one is 2025. So we watched a 3-year span, the exact same pattern as taught in this room over the last 3 years. And the language is very specific. Pull back to an area inside of triggers. Pretty cool, right? I think it's awesome. Nexgen, we've been around for almost 30 years. And to be honest with you, nothing's really changed. There's not a lot that's changed in the last 30 years. It's still momentum. It's still path. Here we go. That's from 2024. Here's the trend trade from 2024. Everything says down. Pull back to the mid band. Let everything line up. So that was the momentum trade. That was the edge trade. Where's the trend trade? There's the trend trade. Pull back to the mid band. Close below the triggers. Does that sound familiar, trend trade user or trading view users? Exit outer bands and support, or when the close crosses the trigger lines, when you lose the momentum. I mean, this is 2024 or 2004, excuse me. And it's the same look. Same stop theory. It's just gotten more accurate over the years. Because John Novak is happy but never satisfied. Pete, strong triggers. Jump in with all the momentum on both charts. Get out with a loss of momentum. Absolutely beautiful. So I understand the stair-stepping trigger line now. What are the smaller big trigger lines used for on the lower time frame to line up with a higher time frame? So they're separate, Mark. They're separate. And I'm going to do two things. I'm going to answer your question because I don't ever want anyone to not have a question answered. And I'm also going to give you a little thing that I wrote describing the methodology, where to find it, how to use it. But let's go through it real quick. So it's only 3 rules. Large chart has strong trigger lines. Large chart has no terminations. And then we're using the small chart for entry. So on the large chart, you're going to define the direction of the market using the background color. Whether it's green or red, it's up or down. You're going to define the momentum, which is rule number 1, by using only the trigger lines on the large chart, on the big chart, on the slow chart. And strong triggers looks just like this in an uptrend. And strong triggers looks exactly like this in a downtrend. And if you don't have it, if you don't have separation between those triggers, rule number 1's not met. And then on the large chart, we're going to define the areas, anything that could be problematic. And that's the horizontal lines on the large chart. So we're using trigger lines on the large chart first to define momentum. And then we're using trigger lines when price reaches an area to define terminations. And then once the large chart says, hey, Mark, you have momentum, your path is clear, life is good, go to your small chart. And when you do, so watch this. My large chart read is independent of the small chart. I don't care what my small chart looks like until this says go look for an entry. And then when that says go look for an entry, I'm done with the large chart. Don't care what it says. It's already told me everything that I need. My job is to look for pullbacks to areas inside of triggers. So they won't necessarily line up. The large chart, the slow chart, the broad stroke of the brush, this will give you the overall opinion of the market. This will let you know which direction it's most likely to go. This will let you know that it has the momentum pushing it. And then inside of that one bar, so far we've got all of these bars. And that's the refinement process. So when we go through and we talk about it, this is all the momentum we could ever hope for, but it's only the potential to break. It's not 4 triggers above. So it's just potential, and you're going to have to go through and learn that lesson. You're going to have to study it. You're going to have to recognize it. You're going to have to commit to memory. And this pisses people off. Why can't I just buy the software and get rich, right? You're going to have to commit to memory that there are looks on your large chart that tell you don't do it. It's pretty weak. It's not likely to break. Now it has the potential to break, and then it's the clear path. And a couple days of study, you'll be fine. If you use the same spreadsheet that I pulled those examples off of that I dropped in the room, there's your strong triggers, there's your clear path. That's when it's not clear, and then it goes back to defining entry. So they are independent of one another. Does that make sense? First 2 advantages here. Small chart is just an entry chart. That's it. And nothing has changed on my large chart through all of this on the small chart. Does that help a little bit? These are perfect questions. These are amazing questions. I don't use the large and small trigger lines on the smaller chart. I do. I use the triggers to define retracement zones. And then small triggers and large triggers, their relationship is the same as the relationship here. So you could say I have strong triggers, or you could say I have weak triggers. Separation is strength. Like strong triggers is always strong triggers. So if I have strong triggers on both charts, that's just up in the advantage. Does that make sense? But I do. I use the large triggers to define retracement, and then I can use the small triggers. Let me see if I can find a good picture. Here we go. even on this chart, when there's separation, that's strength. And when I'm hoping to break an area, that strength is very reassuring. It lets me know that there is momentum on both time frames and everything is screaming up. But it only works its way into the rules, Mark, when it's the potential to break. When it's just the potential to break, I want to see strong triggers. And guys, there's your second lower divergence, and they still haven't worked their way up. Great questions. Just keep them coming. What do you mean they don't add up? So, Mark, when you say they don't add up, tell me what you mean. All right, so let's pretend that there's no fib here real quick, Mark. This is where learning, where? Do you see the momentum on the large chart? In all of this, the momentum has never changed, right? The large chart looks exactly the same despite all of this. So we're going to allow the large chart momentum to define how we feel about momentum. So if these small triggers turn against me, Mark, if I have a clear path, hold on. Let me make this a clear path real quick. If I have a clear path, I'm not worried about a loss of momentum here. It doesn't faze me at all because look at how strong this chart is. This is where my first advantage comes from. Now, the same is true on clear path. If my large chart is wide open, and I'm going to go find a picture real quick. I've got a million pictures, Mark. Let me find, this is the one that I want. If my large chart has a clear path, Mark, I don't care about these one-to-ones over here. That's just something to give me a bounce to my perfect entry, to be honest with you. So let the large chart lead the way. Let the large chart define momentum and path. And once you have it, don't worry about it. And know that the only thing you're looking for on a small chart is a pullback to areas inside of triggers. Does that make sense? It's actually less is more. There's less moving parts than most people think, Mark. It's just one phrase. On the small chart when the large chart is good. Pullback to an area inside of triggers. Go cat go. That's it. That's your entry. And then what that entry is the fluctuation inside of that one bar that never wavered, that never faltered. Your momentum stayed true. Your clear path stayed true. This is just that tiny little meaningless fluctuation inside of that one bar with all the good stuff. I love these questions, Mark. Don't stop until you have like the ultimate clarity. Don't stop because those are amazing lessons. Good job. Let's keep doing that every day until you get to where you want to be. Big Rat, sorry for the delay. You're driving 8,000 gallons of fuel. Don't smoke. So no divergence is best on 5-1. It depends on the trade. I see a lot of one divergence trades, and though it was okay unless there was a second, there was a higher, lower, or 3. I did see somewhere where 3 higher divergences were okay, very confusing. And how many bars passed is considered a break. So, Big Rat, let's talk about it first. If you have a high probability trend trade, the only thing, if it's 100% clear path, the only way divergence plays in on my small chart is if there are 3. That's a termination condition. So if I had 4 triggers above this fib, 2 divergences wouldn't bother me. So you have to know what kind of trades you're getting into. Is it high probability or is it medium probability? There's different rules for each trade. And divergence factors into the medium probability. Sometimes there's a second lower. People will use that for management. There's a million ways to use the software, Big Rat. Million ways to manage. You guys are finding some creative ways to enter. But when it's perfect on the large chart, pull back to an area inside of triggers. That's the easy one. Don't overthink it. If it's only potential, that's when divergence comes in. And these are just entries. That's all we're talking about is entry. We're not even talking about management yet, because great entries create easy management. So in regards to divergence on the entry, if it is a clear path, it takes 3 divergences to keep me out. If it is not a clear path, your plan that's provided every day for the new user says 1 divergence is enough to keep you out of that trade. Does it mean that you can't take the trade? Of course not. Take it if you want to. That's your right. But that trade is no longer the best of the best way to take this trade. With 2 divergences, it's even worse. With weak triggers, it's even worse because it's not the perfect trade. You are hoping that area breaks, and it hasn't broken yet. Does that make sense, Big Rat? I know you're driving. And then the second part, how many bars passed is a clear path? It has nothing to do with the bars. It has everything to do with the triggers. It's when the bar reaches it that you start counting triggers. And watch this. If no triggers get through, it's a termination. And if 2 triggers get through with momentum, now it has the potential to break. And if 3 triggers go through, it's an even better look. But until 4 triggers go through, I don't have a clear path, which means that any trade that I take is only a medium probability scenario. Does that help, Big Rat? I know it's hard to learn how to trade while you're driving a truck. So this is all recorded. Go back and revisit the recording as well, and hopefully we'll get you there. And I know there's a lot to think about, right? There's a million options. Have you guys ever been to a buffet and you're like, just, I love everything. And you load your plate up and you're sick before you have the good stuff. Guys, trading's a lot like that. There's 200 million ticks every day. You've got to catch like 20 of them. That's it. You've got to catch a fraction of the movement. And for a lot of you, that first trade is great because it's 3 triggers from a termination. And a lot of you got in at 60 and you made money. And you went break even on the second contract. And then maybe you even re-entered on a reversal bar up and you made money. And guys, there's a lot of these that don't fit the beginner's plan. And I'm telling you, there's a lot of great options out there. There's a lot of solid trading that happens outside of that beginner's plan. But your beginner's plan is designed to teach you to read your indicators so that you can make the decisions. Good stuff, guys. Good stuff. All right, Big Mike. Morning. You only use small triggers in the large chart on TradingView. Absolutely. Can you show me the difference between small and large triggers on the TradingView chart? I'd love to. So when we go to TradingView, here's the cool thing. I give you guys a workspace in the plan, Mike, that doesn't even have large triggers on it. It's only small triggers, which means that it's only one option to read, which is pretty cool. Now, if you wanted large triggers on there, let's see if we can go to the ones with. Let me go to these and click on a 15-minute. And no, John's even put in the ones. No, there we go. So Mike, there's your large, and there's your small. Make sense? Your large triggers though, Mike, are you still with me? And just for everybody, they're freaking glacial. They are so slow. They are going to, because here's a great example. You can start looking for longs, Mike, right here with those small triggers up. Yeah, or if you want, you can take them off, or hold on one second. John just put it in, I believe. He added my very, very basic ones, and I don't know where he put them. But in the KISS plan, Mike, and I'll drop it in right now. In the KISS plan, right at the very top, there's the ones without, the very, very minimal, to keep you focused ones. So you can remove them or you can do it. The ones that I did took away the colors as well. But what happens is, man, you could have been long, but that red background might freak you out, right? And you could have been short all the way down to trouble, but those large triggers up might freak you out. They're so stinking slow. So we just got rid of them. I said, let's give these guys less to think about. And guys, that's how my brain works. How can I do this in the fewest moving parts, right? Let your small triggers determine direction. Let them tell you whether you have room. And I don't know if that was a trade. I think that was. With the smalls down, with room to trouble, there was your close on the correct side of triggers. It was a little tight up there to get back to the outer band, and it did create a little stutter, but that trend trade is still going down, and it went down all the way to the zone. Pretty cool, right? That's your trade. Now, one of the things that I see every day, my job is to keep an eye on you guys in the funding company. One of the things that I see a lot in the funding company, and this is, I think, primarily old Rinko bar users, I see a lot of people get in at these one-to-ones because they think the market is supposed to go down and get run over against the triggers. And then they get in at the mid-band and they get run over by the triggers. And they get in at the zone and they get run over by the triggers. And those of you that are in the funding company, the close on the correct side of the small triggers is money. It's going to keep you from getting just steamrolled on the way up. The other thing that I see, and maybe you guys are trading without zones, I see people taking that short trade right there, saying the market's got to go down, I'm below that zone, look at this, that's going to be money. And they never even look over here and say, oh shit, I've got nowhere to go. Pardon my French. Momentum and path, guys. And I think TradingView creates an enormous amount of opportunity because it forces patience. It forces you to wait for closes on the correct side. And guys, there is literally a timer on the bar. And you'll sit still and say, you know what? I've got 45 seconds until I can even click go. And you sit and you're calm, and it's refreshing, I think. For someone like me, it works very well. My trading has to be very black and white because my brain is anything but black and white. So, good stuff. We've got a little more time, guys. What do you want to talk about? There's your third divergence in the same price range, right? So now not only has this area not broken yet, you've also got a small chart termination, and there's going to be times where they go up anyway just to make you question everything. You've been keeping track of LC on the SC for better entries. Large chart on the small chart, is that right? Zones? Well, sure. So Andy, the rules are don't trade into an area, right? This is where you decide that you have room to make money. This is where you enter to get to that place to make money. And you recognize the little roadblocks on the way, and you're prepared to manage. And it's crazy, guys. When you let the large chart lead the way, the small chart is just a vehicle for entry. That's all it is. The small chart is nothing more than a way to capitalize on the advantages that the large chart provides. And if the large chart doesn't provide the advantages, looking to the small chart for an entry is very disadvantageous, is a good way to put it. And guys, I love talking about all this stuff. I love talking about TradingView. I love talking about NinjaTrader, guys. I love talking about indicators. I'm a huge fan of patterns. They make me happy. I will talk about anything you guys want to talk about. There was a post in the room the other day, and they're not here, so I'm not calling anybody out. But there was a post in the room the other day, and the question presented was, hey, how come I keep getting stopped out on my momentum trades? And how am I supposed to pick a zone on these trades? And I keep losing money on these trades. And the tone was very negative, and it was very, I'm upset with this. And the one thing that had never happened in the room was I'd never seen a loser from this person. I had never seen a picture posted in the room where it wasn't a winner, which is great, guys. Dopamine is amazing, right? Show me what you do awesome. I love it. And if you show me this picture, what am I going to do other than say, wow, that's kick-ass, way to do it, nice job, right? But what happened is when they were upset that they kept getting stopped out of these trades. Let me see if I can find a working example of it. The trade presented was, here it is right here. Let me see. No, that's not it. Sorry, the market got a little choppy for a minute. So right here, what they were doing is they were saying, I want to get a good picture so that when we play question and answer, it makes sense. And the market looks like it's been behaving today. My goodness, the market's been behaving today. I mean, just so many beautiful momentum trades. All right, so let me just do this. They posted in the room, and the one thing that they didn't have to take their momentum trade was momentum. The smalls were below the large for the long trade. There was no odds favorable momentum on the small chart. And this person had spent, my goodness, I went way back, didn't I? This person didn't want to post in the room because they don't care for feedback, and that's your right. And this person was living their truth on what it means to take a momentum trade. And they were missing one little element. That's it. It was one thing. Other than that, everything was perfect. But it was that one thing that I had never seen them do that was costing them money every day to the tune of thousands of dollars on simulator, which was destroying their confidence, which was keeping them from moving forward with the software. Does that make sense, everybody? They believed they had the perfect momentum trade. They never gave me the opportunity to fix the one mistake that they were making. Guys, I'm saying this because if you're not winning more than you lose, if you're struggling with something, there is nothing you can present in this room that I won't be able to read the chart. There's nothing you can present in this room that I won't be able to identify the mistake. There's nothing that you can present in this room, no mistake you could make that I haven't already made 100 times, probably 1,000, and learned how to fix it. So it's fun to post winners, guys. I want you to post winners. I want you to brag. But there's nothing worse than posting nothing but winners and getting your ass kicked outside of this room, getting your ass kicked in the real world, and letting your ego get in front of your success. So there's my little preachy moment. Post your losers, guys. The whole idea is that you learn what you're doing right and wrong so that you can fix it. I had to do it. I did what you guys did. I skipped posting losers for a long time, and I just kept losing. I never fixed it. Once I started posting my challenges, I knew why I was winning, momentum, path, and entry. Why was I losing? Guys, I got help on management. I got help on entries. I got help on chart reads. I got help on patterns. I got more help than I knew what to do with, which was pretty cool. So you have that same option, guys. You have that same option. A lot of you have taken advantage of it. But one of the biggest challenges that people do is they try to do it on their own, and you don't have to. Every popular sports player ever has had a coach. Every successful tycoon has had a mentor, guys. Let me be your mentor. Let me be your coach. I've never had anybody in the history of this checklist do it right and do less than 70%. I'll say that. It's a bold statement, right? Never had anybody use this checklist and do worse than 70% ever in the history. Now, let me talk about the other side, and then we're just going to call it a day. I did have somebody use this checklist, and they were doing about 40%. And Mark, how could they possibly do 40% if they were using the checklist? Well, Big Rat, I'm going to use your question as an example that we got some clarity on. They thought as soon as a tick got through a fib that their path was clear, which means that they were marking yes when the answer was no. And they thought strong triggers meant that the colors matched had nothing to do with separation, and they were marking a yes when it was a no. And they were taking an area or taking an entry from an area, not an area inside of triggers. And they were marking yes when it was actually a no. And this person never posted a loser in the room, never posted a winner in the room, never posted in the room, tried to teach themselves to be a professional day trader watching videos of me talking. Yes, Big Rat, absolutely. So what happened after a very angry person on the phone with me is we learned how to follow the rules. We learned what they look like. We learned how to identify it. So Big Rat, every day, I say these are the areas that could stop a market. Every day, I say these are the names of the areas that could stop a market that are large chart terminations, right? And guys, sometimes you're busy, sometimes you're distracted, sometimes you don't hear it. Go back and watch the first hour of class 5 times in a row. You'll know exactly where your rules are met. You'll know exactly what your rules look like. You'll know exactly how to define your entry. And then you've got to commit those concepts so that you can be consistent. When I got the person to show me 5 pictures of what they were doing when they were taking these losers that he swore were supposed to be winners, it took us 1 week of conversation to fix every misconception that he had about these rules. And then once we fixed every misconception about what his truth versus the actual truth, and he actually had them met, he called me back 7 days later, let me enjoy my weekend. 93% winners on the day, or on the week, guys. 93% winners. And all he needed was a little clarification of his misunderstanding of the rules. So keep asking every day until it sticks. I ask the same question 1,000 times, and I don't want you to think because I've answered your question once that you don't get to answer it again. Guys, answer it 1,000 times, every time, over and over. Because it will stick eventually. It will make sense eventually. It will be second nature eventually. And when it is, you have everything you need. You got the keys to the kingdom. So Big Rat, I actually have a picture for that one. Yeah, I know it is tough. I got you, dude, all day long. All day long. Don't stop asking. But I want you, when you're done driving, to know where the resources are so that you can kind of review a little bit, right? Because you're not going to be driving when you trade. Steal this document. It talks about how I teach, what the core is, what the rules are, where to find them, and breaks them all down individually, so that you can go through strong triggers, areas that can be terminations, defining a termination, what it looks like when a termination breaks. I mean, literally everything in 2 pages. So let that be your little resource when you're off the road and maybe class isn't going. But man, if the doors are open in the classroom, there's nothing off limits. Ask a million times, please. Because it makes it better for everybody. It really does. It makes it better for everybody when you guys have the courage to ask questions. And I try to be very, very iron fist and a velvet glove with you guys. I hope that you can tell. Good stuff. Good day. Good questions. Guys, trading can be overwhelming in the beginning. It feels like there's a lot. It feels like there's a lot. You can break it down on the checklist. Let me give you this one too. Is the market coming from a strong top or bottom? It's not mandatory, but it's a termination that reverses the market. So there's the first one on the checklist in a picture of what it means to be true. Strong triggers, picture of what it means to be true. No terminations, and this goes through the whole concept from termination to clear path, and then defining the entry all the way down. Guys, that's the high probability trend trade. Defined in 4 pictures. Memorize those looks. Get those patterns in. You'll be floored. Success follows process. It really does. All right, guys, we got time. They decided to go up, didn't they? Sometimes they will. S&P. Sometimes your rules aren't met, but it's still the pattern. Amazing. Never got out of the retracement zone. NASDAQ is going down. Sure is. What direction were the triggers pointed, Miss Cindy? They're just following the triggers. And now we're perfect, right? Strong side, down triggers, all the room. Your momentum trade, as long as those triggers don't roll up. Oh, let me get on trading. As long as those small triggers don't roll up, that's your momentum trade right there. From the strong side of the triggers, with room to trouble, with strong triggers. Whoop, my chart's just recalculated. That would be the momentum trade. But guys, if it pulls up here, those small triggers are going to roll. Does that make sense? It's never going to make it to this area without those small triggers rolling. So that means before it even starts up, either here or here, I'm going to need that pullback. There's the triggers rolling. I'm going to need a close on the correct side of the small triggers. Does that make sense, everybody? I know exactly where my trade is most likely to originate. I know exactly what I need to have happen for me to take that entry. And I know it because I know my checklist like the back of my hand. So I need a pullback to an area. And then I need a close on the correct side of the triggers to capitalize. And if they go down without me, it wasn't my money. I took 7 trades yesterday. 70% winners. And I used the KISS plan, guys. I used the exact same KISS plan that you guys use. It was a good day. It was a good day. You guys just want to watch this one and see if it sets up? Pete, everything says down. You didn't catch that one, so you just catch it with all the momentum below the fib and ride it down to the next fib. Outstanding, Pete. Like an ATM, right? All right. So guys, what happens if I don't get my rules met? Should I make it up just to stay busy? Should I break them just to stay busy? If it starts to go down, should I jump in just to stay busy? The answer is no. The answer is no. Small triggers are up. My only option is an area and then a close on the correct side. And if I don't get it, I choose not to enter the market. I have to stay true to my plan, guys. A lot of times on TradingView, you'll watch it do this and you'll be like, oh, dang it, I knew it. And then like 20 minutes later, it gives you the perfect trade. 90% of your day is doing nothing.